Moving into Chapter 5, this is going to be very much building off of Chapter 4. Now, instead of just adjusting entries, we're going to go into what's called closing entries and the post-closing trial balance. So now we have to close accounts when it comes to that end of that fiscal period. So our learning objectives are listed here. So listing the steps in the accounting cycle, journalize and posting closing entries for a service enterprise, preparing a post-closing trial balance. We're going to talk about cash basis and accrual basis accounting, and then we're also going to prepare interim statements as well. So learning objective 1 for this video is list the steps in the accounting cycle. We're just going to kind of go through what that process is because you're hitting the end of that process now. So step 1 is going to be analyzing source documents and recording business transactions in a journal. Step 2, then we post our journal entries to the accounts in the ledgers. So we went through step 1 is going to deal with putting those entries in our journal, making that official form. And then now we're going to post those entries to our accounts. So we're going to take it from the journal, post it into our accounts in the ledger. Then we prepare a trial balance. And typically this is done on the worksheet. Then we are going to gather our adjustment data and record the adjusting entries on the worksheet. And then we're going to complete that worksheet. And then step 6 is where we're going to journalize and post the adjusting entries from the data on the worksheet. So we're going to take that information from our worksheet, the adjustment information, and we're going to journalize that. Then we're going to prepare our financial statements from the data on the worksheet, something you've also done. Now we're hitting step 8 and 9, where we're going to journalize and post the closing entries and then prepare a post-closing trial balance. So after everything's closed, we put a new trial balance to make sure we're still in balance. So here's just kind of a diagram. This is also in your book of the accounting cycle. So you can see during like our accounting period, you can see it says like, you do your source documents, you analyze your transactions, journalize them, ledger. And then you'll get to journalizing, adjusting, and ledgering. A lot of the work comes at the end, so that's where you pull from this information. So from your ledger, we're pulling that information for our worksheet, and we're completing that. Then you can see we're going into our financial statements after that worksheet's completed, and then we'll go into doing our closing entries, and we'll go through what those mean. And that's just done at that end of that cycle and typically at the end of that fiscal period, and then they start the whole process over. So you can kind of see those first three, the checking source documents, doing the journalizing transactions and ledgering them. That's just going to kind of be repetitive throughout the fiscal period. As once you come into your towards your end is when you start finishing that accounting cycle. So before kind of going into this chapter, closing entries. So the purpose of closing entries is to close the accounts that need to be closed. So basically what that means is we're going to zero them out. So every year we want to start fresh because a lot of times we use our year to year for comparison of how we're doing. So that's where we will close out revenue, expense, and drawing accounts every single period. What we do when we close those out is that we're going to update the owner's capital account or the equity they have in the business. Everything else stays open. So closing entries are made after the last adjusting entry and after the financial statements have been prepared. So once those financial statements get done, then you go in and do your closing entries. Now you can see here with our expanded accounting equation, you will see that it shows what's closed and what's not. Assets stay open because our assets aren't going to, we want to carry those over year to year to year. Liabilities are also going to carry over, and then our capital is going to get carry over. We're going to close drawing for the year, revenue, and expenses. We want them to start all at zero come the next year or the next fiscal period. Okay. When we close those, we just don't like put them into thin air. They actually get updated into this capital account, but we just carry it over through capital because we want to start at zero at the beginning of each year. Okay, so these three stay open, these three are going to close. Okay, so just for a little practice, put these in order, match them up to what step 1 through step 6. And then you can see step 7, 8, 9, and then the solution as well. So if you have any questions, just let me know.